This week, we're going to talk about the wild end to the week in the markets. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is ag economist Josh Maples with Mississippi State University Extension. Josh, great to see you again.
Hey, Megan, great to see you too.
Well, no cattle on feed report, no major trade data, anything like that we would normally talk about. So we get to focus on the markets this week. So let's get right to it.
Let's do it. Yeah, we're short week in terms of reports that we might normally be talking about, but still plenty going on with the markets. So we can get into a little bit of that. Let's start off with some highlights. Live steer prices, $239.73 per hundredweight. For the 5 market average, this was up about $5 from a week ago, up about $52 a hundred from where we were a year ago. If you look at October live cattle futures, I know we're going to talk about this a little bit today. That futures contract, even though we're going to talk about a big swing a day, was actually up about $2 from a week ago per hundredweight, sitting at $240.50 per hundred. The October feeder cattle futures contract was down $3.50 on the week to $372 per hundred. Shifting over to box beef, choice box beef was at $367 at the end of the week. This was actually up a little bit, about $2 per hundred from where we were a week ago. And that's looking at trading this morning on that box beef report. Hog side, cash hogs down a little over $2 to $93.40 per hundredweight. Look at futures, December lean hog futures were down about $2 to $82.35 per hundredweight on the week. And then looking at the pork cutout was basically unchanged from where we were a week ago, 104 and 74 cents per hundredweight this week.
Josh, I want to talk a little bit about the box beef number. When we talked last, I think we were well over $400 at that point. We've seen a pretty significant pullback. When you look at that much of a change or that much of a drop over the course of a month, what are you watching? What are you looking for in terms of demand? Is that coming into play as well?
Yeah, demand is a piece of this, Megan, but really what I look at in terms of the drop you're talking about is really kind of that delayed re-peak that we had. We thought we'd hit a peak earlier in the summer, and then we kind of had a secondary, surge. And so, we're coming off of that. And so I think some of it is just kind of seasonal, what you would expect to be happening, but it was kind of disrupted by that kind of late peak that we saw. So I do think that's contributing to some of the kind of the sharper decline. I was interested this week to see us pop back up a little bit. And I think it does go to tell us a little bit about is how tight beef supplies really are. We always see fluctuations in box beef cutout. Don't get me wrong, but it just seems like this year maybe we're seeing a little bit more fluctuations, a little bit more volatility there on the cutout. And I think a big part of that is just how tight supplies really are.
All right, let's talk before we get into the cattle market swings and talk about what happened today. Weekly slaughter, as we're looking at cattle and hogs, definitely still seeing some changes from year ago, especially on the cattle side of things.
Yeah, so just looking at weekly slaughter this week, and I'd love for us to talk a little bit about where we're sitting annually at some point in our conversation today. But let's talk weekly right now. Weekly slaughter, 567,000 head for the week. This is up 20,000 head from where we were a week ago, still down about 40,000 head from where we were a year ago. Hog slaughter, 2.59 million head. This was up about 11,000 head from a week ago, but down about 17,000 head from where we were a year ago. So overall, a relatively strong week on the slaughter side compared to where we have been in some recent weeks.
Let's go ahead and talk about that change annually. Now we'll get into that before we start talking about some of the things that are happening in broader market conversations. When you look at this annual change, what are the things that are sticking out to you in terms of those slaughter levels?
There's a lot sticking out. I think one of the biggest things is really how different it is depending on type of cattle that we're talking about. So if we just look at cattle slaughter data, Megan, from January until through the end of September, total cattle slaughter, including steers, heifers, cows, everything, a little over 6% smaller than we were a year ago. It's a big number. But you really kind of got to dig in a little bit more to think about the implications this has on things like herd rebuilding or calf, feeder cattle availability, those kind of things. So if we look at steer slaughter, only down about 4.4% from where we were a year ago. That's still a lot of cattle. 4% is a lot. Heifer slaughter down about 4.8%. So big decreases there, but you notice that that's smaller than that 6% overall. That's because the big driver has been beef cow slaughter. We've talked about that before on the show. Beef cow slaughter down 17.7% from where we were January through September of 2024. And then if we even pull in the dairy side, dairy cow slaughter down about 5.5%. So, sometimes you can see beef cow slaughter down, but maybe dairy cow slaughter up a little bit. We're not seeing that. It's dairy cow slaughter has not been down as much as beef cow slaughter. But the big reductions we're seeing in total cattle slaughter numbers are really being pulled up by the cow numbers. Really interesting impacts for where we are in this cattle cycle and what it means as we go into next year.
I want to talk, I'm assuming that big drop and that substantial drop in cow slaughter is coming from two factors, right? We've slowed some of that, or maybe we're not doing that as much, but we're also, right, pulling from a smaller herd or a smaller beef cow herd, and that impacts that as well. When you're looking at, is there a number, a percentage that you see that's like, okay, at this point, maybe we're not culling cows, but we might start to see some growth in the cow herd because we're not as aggressive in that beef cow slaughter?
Yeah, I think it's less of a percentage at this point, and just really looking. I think we may have talked about this back in kind of July, mid-year. Really interested in what happens in the second half of the year with beef cow slaughter numbers, if they were continued to be as low as they had been, and we're seeing that. So if we're in double digits below for the year, we're talking about a pretty significant change from where we have been. And I think that could certainly lead us to the point where, January 1, 2026 beef cow numbers could be even with where we were, to start this year. I just don't see a ton of room for a lot of growth. I certainly don't think that we're expanding the herd sharply, because it's going to take more than just not culling as many beef cows to do that. But this is the number to look at if you're looking for any sign that we're seeing some stabilization in beef cow numbers as we head into next year.
Josh, when you look at, so we're not going to have a cattle on feed report this month. I would like to say there's maybe a glimmer of hope that things get reopened and things start moving again. At this point, everybody seems to be pretty much have dug their heels in, and we're not seeing any movement. Knowing that we're going to miss the October report and not have that percentage of heifers on feed, how big of a hole is that in terms of gauging what's going on in terms of herd size and herd rebuilding and potential expansion?
I would say, Megan, that given the timing of it, it's the biggest impact it could have because this quarter is one that we really want that piece of data for. I mean, we always want it. Don't get me wrong. We always want to see this, but it's so much more important for us to see that percentage right now than say it was 2 years ago or 3 years ago or 5 years ago, whenever we kind of knew what was going on with feedlot dynamics. And so but right now we're really interested in those percentage of heifers sitting in feedlots, and we do. There's plenty of speculation out there that we are starting to hold back a few more heifers, and we should start seeing that in some of the cattle on feed data. Is the speculation, but it's only speculation, right? And we really look to these reports to help us try to figure that out. So, yeah, that one in particular really hurts to not have this month. And I'm really hopeful that whenever government does reopen, that we're able to backfill that report. I know sometimes we do, sometimes we don't. I have no idea what's going to play out this time, but I'm certainly hopeful that we're able to get this at some point.
And if we don't, it's January, right?
That's right. Yeah. Unless some change to operations happens and they do one later, I think there's still a lot up in the air of what we're going to get, when we're going to get it. But yeah, it could be that we don't get any kind of meaningful data to help tell us stuff about herd retention or heifer retention and herd expansion or herd stabilization until January, when we get the annual cattle inventory report, and that might be the next feedlot mix update as well.
I want to talk a little bit before we get in and finish up to talk about kind of this wild swing in the markets here at the end of the week. How much are you watching also as so much as speculation, because we just don't have concrete numbers? Pasture conditions, grazing conditions, fall grass, those types of things, as you're talking to producers, whether it's in the Southeast or the rest of the country, about feeding and input cost and using that to their advantage at this point, and maybe starting to make some investments in replacement females.
Yeah, we're certainly talking about it, and in most of the South, especially, we're in a better spot than we have been in some very recent years. And I think back to 2 years ago, there was plenty of appetite in the Deep South to do a little bit more expansion, but we were hit with heavy drought. And so it kind of prevented a lot of that from happening. Now we're in a spot where I think pasture conditions are in better shape. They certainly are in better shape than they were during that drought, but cattle prices are a lot higher too. So it's one of those where it's really, it's interesting, Megan. And I've gotten this question quite a bit because it's been a really good year revenue wise for cattle producers. And a lot of them do want to reinvest in their herds in some way. And that doesn't have to just be buying cattle. It doesn't have to be buying heifers. It can be investing in pasture management, which, I've heard quite a few producers considering that as hey, I want to get my pastures in great shape to, help me minimize costs over the next couple of years, as opposed to investing in more animals at this point. So it's a great kind of a question that producers are wrestling right now, as we've got some additional revenue, probably not used to having that. And, what are we going to do with it? And the answer is not always just buy more animals. Sometimes it's an investment on the infrastructure side.
It's a good point to bring up, Josh. I appreciate that.
Yeah.
That's why you're the expert.
I think it's a really key thing that producers are kind of fighting through a decision wise. I mean, because they remember 2014, 2015. I think the big pull there in a lot of cases was, a lot of producers bought more cattle, and they're going to do that this time too. But I do think it's just different this time around, where, producers are servicing debt load that they may have accumulated. Once they do that, then they start thinking about, okay, are there some investments I can make on the farm level that will set me up for the next 5-10 years? So I think that's a really great question for producers to kind of wrestle with.
All right. As we wrap up today, the big news, to kind of set this up, we're talking on Friday afternoon. Thursday, late in the day, President Trump hinted with very little information that there could be a deal in the works or near a deal that could help curtail or curb beef prices, thinking about it on the retail side. The market's reaction this morning was very negative. Feeder cattle were limit down. Live cattle futures were sharply lower. While we still ended up higher on the week, it was a very, very negative day and a very, very negative way too in the week. So I want to talk first, the lack of information. How does that, in an announcement like that, how does lack of supporting information come into play, and what triggers the reaction that we saw today?
So I think a lot of this goes back to conversations we've had before about how markets tend to not like uncertainty. And so, right now, Megan, we're missing some key supply side pieces. We're not getting as much data as we typically would expect. And then the announcement yesterday, or the comment yesterday, also didn't have any concrete detail to it. So it's just kind of a comment that, hey, something's going to happen. Lower beef prices. Of course, people start thinking about, well, lower beef prices, that's going to mean that's got to affect cattle prices too, right? And so I think it's one of those things where uncertainty, just broad uncertainty in the market about supply and demand fundamentals, lead to the kind of reaction that you see today. It leads to traders, maybe getting a little skittish and wanting to get out. And, that's, we can see big movements like we saw today. Because you're right, most of the week, really through Thursday, if the week ended yesterday, it was a really, really strong week for futures markets. And I think the feeder cattle futures, the October contract, it traded within like a $10 range this week, which, big range. And same on live cattle. It wasn't quite that big, but still a pretty big range. So volatility is the reaction that markets tend to have whenever they're faced with uncertainty. And I would say that that's what we're currently faced with.
When you see, and obviously we can talk about some of the rumors a little bit. I mean, there's been some of the rumors that have been thrown out have been importing more beef, whether it's from Argentina or Brazil and some of those other countries. When we look at not having concrete details and looking at an already volatile market because of where the prices are just in general, how do you have conversations about, or what conversations about risk management do you need to be having at this point, knowing that this is kind of more, I want to be careful how I say this too, because I don't want to make any accusations, but making comments related to the markets without supporting materials. I think about, some of the, if we're thinking about the grains and some of the conversations around those as well, right? And oil seeds. So knowing that this is happening, how do you protect yourself from these wild swings and these big moves on the markets?
Yeah, I mean, I think today is another example of why you want to have a solid risk management plan, because there's going to be days like this, and I don't know if this is going to spill over into the cash market. It's too early to say that. We could this thing could rebound on Monday or Tuesday, and we don't even talk about this come next week. So we're all it's. But if you do get into a point where there's a drop and then it does spill over into the cash market where you're selling your cattle, even if prices are good for, on average, for 3, 4, 5 months, if you happen to sell on the week that they're not good, you can take a hit. So that tells you that having some sort of risk management plan in place can be beneficial to, help you kind of not. Prices are good, prices are really good, but even in really good prices, it's helpful to have some sort of plan to protect you against downturns. And I'm not saying this is going to be a downturn yet. We just don't have information at this point. And I think that's what's telling about this reaction is, anytime there's speculation about anything and there's not details about what's going to happen, every trader gets to come up with their own speculation of what's going to happen, right? So you mentioned the rumors floating around, and there's a lot of them. I've read a lot of them, heard a lot of them. I have no idea if any of them are true, or I don't know. But anybody who's actively trading in this market has to kind of develop their own expectation. They have to come up with, okay, what do I believe, and what do I think is going to happen, and how does that affect the trade that I'm going to make? And fundamentally, that's how you see these big market swings as a reaction to that uncertainty.
And I would assume the fact that we're in a 24-hour news cycle doesn't give a lot of room for digestion and a wait-and-see approach.
No, I mean, everybody's trying to get ahead of everything, as they should, but it's the uncertainty on the supply side, and also this uncertainty piece kind of on the demand side a little bit. And we're just going to have to get more information before we know. What we do know, Megan, is fundamentally the supply fundamentals are still incredibly strong for prices. We've got really, really tight supplies. So we're still broadly in a really supportive environment for cattle prices, but that doesn't mean we're not going to have days like today where things bounce, pretty hard.
Josh, anything else this week?
I think that's it. Let's regroup next week.
We will try. Guess what? You're off the hook next week. Charlie will be back with us to check in.
There'll probably be a limit up for Charlie.
It is the luck of the draw, I think. Josh, it's great to see you. You too, Megan. Thanks. To our weekly livestock market update delivered to your email box every Saturday, go to brownfieldagnews.com. You could also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.